All right, I think we are live.
Gorgeous. Hello, everyone. To our Cryptotax update, which is the fabulous number 9. We were keeping the Cryptotax update on not so frequent basis. Now we started recently having a Cryptotax update. Tune in every last Wednesday of the month, where we have a Cryptotax update as an open community call for everyone to directly engage with us, have an open Q&A session on all matters around crypto and compliance and taxation. My name is Georg, or just refer to me in English as George. I brought with me my esteemed colleague Johannes, who has been a crypto tax expert since 2-3 years now, formerly with Question, now joined us earlier this year. And we always have an esteemed guest with us. This time, Alex from Smape Capital. I would introduce him shortly, where we would show you, to all of you, of who we're working with, on whose opinion we strongly rely on. And it's my pleasure that Alex keeps sharing his opinion on his esteemed thoughts on the crypto space in particular, which are quite thoughtful, and then we can build on them. So thanks, Alex, first of all, for supporting us, trusting our network, our community for so long already, that you've been in touch with me personally and with Johannes. So that's really good, that you also share your expertise and also your time with us tonight. So hello, Alex. Good to have you here.
Thank you so much.
We have this time institutional adoption, and that's why it's also very good to have Alex with us. Alex, you're GP of Smape Capital. Smape Capital is an crypto investment fund. You correct me, Alex, if I put some legal wordings wrong there. But what is maybe one strong argument along the lines of institutional adoption, that Smape Capital is a specialized fund who is in crypto, investing into the next, I would say, cycle of crypto. I think that's a direct quote from your Alex I'm using here, but I think that's pretty much true. And also at the same time opens the floor to institutional investors, institutional money, institutionally. I mean, people with the mindset of traditional institutions to take part in the crypto ecosystem. So that's why your voice here tonight is of particular value. If we talk institutional adoption, may I share my screen briefly with you all, that you get a little bit of an idea of what is so crucial when we talk about crypto tax updates. I would say opinion-led in investment and good decisions when moving between the crypto space. I start with a slide you all know, and that's where we all start with also the crypto tax updates, is the Austrian crypto tax reform. That is one beyond many paradigm movements in that space. I could add MiCA. I could add also the fear, uncertainty, and doubt along the AMLR regulation, which has had the last weekend, when actually a lot of fear, uncertainty, and doubt came out along self-hosted wallets and then privacy features along anti-money laundering regulations within the European Union. The whole story is pretty much short. Along with regulation, a lot of institutional adoption comes along with it, because institutions bear mind of trusted and sound legal certainty and legal provisions put forward by the regulator. As a matter of fact, you do know where the origins of crypto begin. It's fair to say, even though we are all Bitcoin maxis by heart, that I think the stats of 2015 are historic events. And the stats are saying that the total supply of 80% of Bitcoin back in 2015 were in some resort used by and for illicit purposes. So never forget where all this space started, thanks or nevertheless to Satoshi Nakamoto, but also Ross Ulbricht. So never forget that. And that's, of course, the big banger when we talk about institutional adoption the origins of where all that began is in not so wide marketplaces, rather dark marketplaces. And now, thanks, or I would say to do regulation, now this institutional adoption is coming. And you might see that. I mean, for example, Revolut, which wouldn't say is a traditional institution, but rather a neobank, and also within its array of services, a neobroker, tipped this whole off with 130 plus tokens at your fingertips. And it's also fair to say that already that step by Revolut, and Revolut is a supervised entity by the Bank of Lithuania. It's not a systemic relevant bank, which would lead to the fact that Revolut would be under direct supervision from the European Central Bank. It's not a systemic relevant bank, so that's why it is under supervision of the Bank of Lithuania. So still already under indirect supervision of the European Central Bank. We have a bank like Revolut providing 130 plus tokens at your fingertips, as they call it, for institutional adoption in commercial banking. The second point that this Revolut is also doing, which is interesting, is that Revolut is also in the business of crypto custody. So with Revolut, you can open your own, they put it in a form of cold wallet storage as a depot for crypto, which is also unique still in the European Union as a European bank, as a Lithuanian bank, as a counterparty where you put your assets in cold storage. Now, not because N26 is also our neighbors in our office in Vienna at the Accelerate office, we of course have to bring N26 to the floor, where N26 came up with a new partnership in the background with Bitpanda, where N26 crypto, as they call it, should be as simply and seamless introduction of crypto positions in the native app of N26, and they call it N26 crypto. The implementation was pretty, I would say, as you could see it in the details here in the N26 app, that they used Bitpanda as the service provider for the services provided for N26 crypto. And you could also see it in the details that all other products, for example, metals and Bitpanda stocks, are also in fact then serviced as such. And that's actually the interesting message is down here at the corner, at the very bottom, that N26 crypto is a service by N26, but obviously performed by Bitpanda, which is a crypto asset service provider. So what we see is already a merger between traditional financial institutions and technology service provider like Bitpanda, with the opportunity that the full array of crypto investments, well, we then have a look within crypto investments, what really is the crypto investment. But if you look at Bitpanda, of course, we have not only spot trading, you have Bitpanda metals, which are derivatives. You have Bitpanda stocks, which are forms of, again, derivatives, which are forms of securitized stocks. Then you have other forms of Bitpanda metals, which are sundry assets in the text as non-fungible token. So various positions you can open with various different consequences on the tax effects and an actual investment decision the investor performs. And then, of course, I think that is maybe due to paradigm shift. I mean, of course, we had the Bitcoin ETF approval. We would talk to later within the Q&A. But the first major commercial bank, Raiffeisenbank Vienna, Raiffeisenbank Wien, Niederösterreich, introduced more or less the same product feature as N26 did, with a direct link to Bitpanda, where you open the account within the Alba app or the Raiffeisen browser, where you be then internally referred to Bitpanda, where you use actually your credentials from Raiffeisen to enter and sub-account at Bitpanda, and where you could use your ELBA app credential within Bitpanda. And the interesting point is that you are, or every investor is within that, in a closed loop system, simply as it is with N26. They clearly stated also here in the terms, it's a closed loop environment where you open your positions out of the native ELBA app, your banking app, and have the access to the Bitpanda services. And the interesting story there obviously is that the possibility within ELBA is that you have access to all assets and to all services Bitpanda uses. So that's the interesting story of today, and that's of course a major transformation which is happening as of now. And the new story, and that is something we're going to discuss today, is that we see with the emergence of decentralized finance, we see with the emergence of derivatives markets within crypto getting more and more material, that we see on the other side of the pile institutional forms of investment opportunities now coming up. And that brings not only institutional forms of investment into the crypto space, but that brings, of course, also institutional players to the space. And I think that's more or less, I would say, the frame of today, and also the interesting coincidence that all that happens alongside with an all-time high, we just had recently, alongside with the Bitcoin ETF approval and the potentially upcoming Ethereum ETF approval. I want to start with that, and Alex, maybe that's also a very good opening question. Institutional adoption, all within Ethereum ETF approval. Is that coming up? Will that be coming up? What would you say about that?
Well, before we start, thanks Georg and Johannes for having me. I'm really happy that you invited me to this, and we get to talk about very important topics. Is an Ethereum ETF coming or not? Well, it seems like the first applications are coming in already, right? Depends whether this will be approved or not. Ethereum is a little different to Bitcoin, of course. So we'll see about that. I like the fact that you said there's a new all-time high of Bitcoin because of the ETFs. I think, I think everything was well timed, I guess, right? The world knew that the halving was coming. And I think everybody tried to prepare themselves for the halving. Now, in order to get the max out of your investment strategy, of course, there are some, preparatory steps that you need to take. And certainly the most important preparatory step that the ecosystem or the asset class or institutional investors in particular have taken is enable liquidity to come into the market in vast amounts. And they designed a product for this, which was the ETF. So everybody can now hop on the bandwagon as easy as shepherd's pie, so to say. And liquidity, as we've seen in previous runs and then also previous downturns, is absolutely key to driving prices.
Yeah.
Now, if that will happen to Ethereum, I don't know, I cannot say, but it certainly has paved the way for Bitcoin and its current all-time highs.
Yeah. Would you say that that alone fosters institutional adoption, or is it too short-sighted? Because of course, implementations cooperation between Raiffeisen and the Bitpanda, for example, or also the strategic step from Revolut. These are from this perspective of the institution, these are grand steps. You know, and by taking such a step, that alone takes, I would say, not even weeks but months. And implementing such steps takes even longer. And we all do know how long the ETF approval of Bitcoin. I mean, it took its time. I mean, almost more than two years. What's your stand on that? So is this all a coincidence right now that's all happening all together? Because clearly the SEC is not looking at the next Bitcoin halving and waiting for that. But how would you see that?
Oh, but probably the ones that filed for a Bitcoin ETF have been looking at the halving. But I'm not sure. I don't have a crystal ball, so I cannot say anything about that. No, I think there are certain catalysts, right, that drive institutional adoption, and I think designing products that makes it easy for more traditionally focused investors to hop on the bandwagon is certainly one of them. I think there are others. For example, regulation, I think, is one of the most critical catalysts for institutional adoption. Then there is technical solutions that allow for an easy access, I'd say. Certainly is something that we have seen with Bitpanda and Raiffeisen. There is certain kind of technical solutions required for security purposes and custody purposes. I mean, we've got quite a lot of regulated custody entities or custodians already. So I think that's a catalyst, because I'd say the more traditional focused finance folks would need a product, access to the market, and somewhere safe to store their assets, not only to meet a desire for a product by their clients, but also the regulatory requirements that they have to adhere to from their traditional finance regulators.
Yeah, because we have one question on staking, and you didn't mention, I would say, yield or interesting bearing instruments, because if we look at the, I would say, now emerging liquid staking market, that also opens, from a financial viewpoint, the opportunity to generate real yield on positions you usually haven't had in the past, right? I mean, of course, you could mine your Bitcoins as a real yield or lend it out to someone, but speaking from the pure technological design, now with emerging staking and liquid staking markets, and then other forms of staking or validator models, that also generates a real yield, aka it transforms in a sense the position within crypto to working capital rather than a buy and hold position. Would you be so, I would say, progressive as to add that also to that, well, new emerging asset classes becoming more and more institutionally relevant?
So I think it's certainly an additional kind of use case of what to do with your position. I wouldn't go as far as saying it creates a fixed income product, right, with which you can generate fixed income yields. I'd say. Staking in general is also, I think it serves it should first and foremost serve the purpose of securing the consensus algorithm that a protocol chooses, right? Now, restaking in its original sense of generating compound yields, of course, is kind of a top up to the original staking idea, right? Liquid staking added an additional component of, I'd say, getting leverage into those positions, which can make sense if if you're aware of the risks that are associated with such products. Now, I'm not a big fan of getting too much leverage into the system, because eventually, every house of cards collapses at some point in time. And I think establishing crypto and I'd say the blockchain ecosystem, or Web3 in general, as an alternative asset class, has seen way too many kind of bad players trying to take advantage of a little bit of a Wild West asset class, I'd say, back then, right? Which also has cost crypto a lot of time and money in getting the attention and the adoption that we're currently seeing by reputable players, right? So although it's a very nice kind of addition, and certainly gets the DeFi ecosystem up and running again, right, after the DeFi summer that we've seen in 2021, I believe. I'd be cautious and certainly do a little bit more than the usual due diligence on liquid staking protocols, liquid restaking protocols, and so on and so forth.
Yeah, I mean, there is a question to the point of ETFs before Jacob is stating. What is the chance we see an ETF proposal from big players, BlackRock, Vanguard, for assets other than BTC and ETH?
I think currently the current chances are quite low, I'd say. Because crypto in general is still an asset class that is not kind of widely adopted yet. It's still certainly an addition to a diversified portfolio, but certainly none of a core asset of an investment portfolio, at least for, I'd say, 99% of the world population. I think people need to get accustomed and familiar with the asset class as such, the mechanics of it, the environment, the people, the communities involved, the peculiarities, if you want to have it that way, of that asset class, before we can move on into, let's say, smaller crypto assets in terms of market cap than Bitcoin and Ethereum. Although, I mean, there's a lot of ecosystems that are very quickly catching up to the big players these days.
Yeah. Johannes, go ahead.
Yeah, just regarding the ETFs. So is that right that in case we would see an ETF, an ETH ETF approval, it would be probably in May, whereas the chances for it aren't too high as far from what I understand, from what I understand. And yeah, and also an additional thought, well, the only asset I ever heard of, like rumors getting an ETF, which are probably only rumors, would be, yeah, I'm ashamed to say, but it's Dogecoin, I think. But yeah, let's stick to ETH ETF. What do you think about probabilities and timelines regarding a potential approval for an ETH ETF?
As I said, unfortunately, I don't have a crystal ball, right? If I had, I'd certainly share all of the alpha with you guys first.
I appreciate that.
So, I mean, yeah, it's hard. It's really hard to say. I mean, there have been some controversies around, the consensus mechanism switch from proof of work to proof of stake, right? So I don't know. We'll see. As I said, I don't have a crystal ball.
Yeah,
don't know.
where we have a clear side now already is because we were already talking about, okay, what you do with your yield. A good question in our Telegram community channel was, so everyone feel free to join our Telegram community channel as well. Was Alex, who asked if I staked something in 2023, do I have to pay taxes on the value of the reward by the time it was staked or by the time it's sold? And I mean that leads perfectly to the question of how regulation is being able to institutionalize, especially crypto space. The jurisdictions as Austria, Hungary, and Croatia even, where the dry income stake rewards is tax neutral at the time of rewards received from 2022, 2023 onwards. Whereas there are other jurisdictions, as for example, namely Germany, but also the US, where exactly the rewards, staking rewards, lending rewards, mining rewards, generate obviously a tax effect up to the progressive rate, or usually to the progressive rate, because staking rewards are perceived as exempt from capital gains. So that's also maybe a major message to bring about institutional great regulation in the sense of how crypto friendly it is or is not, especially when we look at crypto native, I would say, forms of asset management. Alex, that leads me to my next question to you. If we talk about institutional wealth management, where would you see crypto native, for example, staking, yield management, or asset allocation or wealth management in the overall array of asset allocation? I mean, where we are is, okay, Bitcoin ETF, okay, we've understood it. We've understood spot positions holding, buy and hold, we got all that. But what would you see from 0 to 100, where we are with I would say, crypto native wealth management being executed on an institutional level? Do you see that coming? Are we at 0? Are we at 1? Are we at 2? Or are we already at 25? Where are we?
Well, I'd say we're in the mid-single digits still, I guess.
Okay.
So I think it has not jumped so far, and I'm looking at this from a pure traditional finance perspective, right? I mean, you know, my background is in traditional finance. I've spent 15 odd years in various positions. So from a traditional finance perspective, I think we're in the low single digits still when it comes to yield strategies and in this asset class. Now, I think that there will be a lot of service providers that will find auxiliary services that enable staking rewards and yield generating strategies that, you know, shifting into that space can be very profitable. Now, as soon as this will happen, right, and the technical foundation and the infrastructure grows in general, I think we'll see a lot faster and bigger institutional adoption of also this, right? The big question for any kind of wealth manager, I believe, is what are the risks associated with such strategies, and what clients, from a obviously consumer protection perspective as well, but from a risk management point of view, right? Can I offer to my clients and who would buy into such strategies, right? I think that will be the big question. As soon as you clarify that question, adoption speed will be tremendous.
It's interesting that you outline risk questions here in a special form. What would you say crypto native yield generation, aka partaking in consensus algorithms, in terms of risk level? Are they genuinely risky, or is it again a matter of L1, I would say, development, maturity of the ecosystem? You're investing in the next cycle. So what would you see that? I mean, that's a fundamental question.
It's a very fundamental question. You'd always have the smart contract risk, obviously, right? So that's always there. So there is no free lunch. There is no riskless activity, so to say, per definition. I'd say it depends a little bit on the ecosystem that you're looking into. And generally the APYs should give you a little bit of an indication what's more risky to versus what's less risky. If you look at it from a kind of traditional risk reward matrix, I'd say staking activities in general, right, are more on the riskier side than any kind of traditional fixed income strategies, I'd say. Again, speaking in general, there are, although established kind of, you know, platforms and protocols and whatnot that you could invest your money into without too much of a headache, right? And that would not keep you up at night, I'd say. So the more of those platforms or protocols are developing, and the more there will be competition in the market, the more this will foster adoption of applying those yield generating strategies. It will, in general, bring the yields down of a little bit, of course, but I think there's still plenty of money to be made in this area of the asset class.
Okay. I mean, maybe to also closing our session, a word or in the special question to SMAPE Capital. What are you focusing on? We were only saying you're investing into the next cycle. What is that? And maybe also summarizing this up with our headline topic, institutional adoption. Where do you see, especially that mass adoption, which is always a kind of frequently used quote, aka institutional adoption, is in the next cycle you are investing in, obviously.
So to answer that question, I need to go back a little bit because you know, SMAPE Capital is not a new kid on the block. We've been around for more than 3 years now, right? We started out as an investment collective and launched our first fund last year. It's called SMAPE Smart Perspectives 1. We had the thesis that, you know, after a bear market, there will be another bull market coming, and we need to get prepared for this next bull run, right? By investing early into early stage projects that are very infrastructure focused. So kind of providing a base layer of infrastructure to grow the overall ecosystem rather than cutting out pieces of the pie of niches in the ecosystem. So we started out investing into such kind of projects. Now we're not bound or focusing on one particular ecosystem. We're completely chain agnostic. We're ecosystem agnostic. We look at who can actually drive the next kind of cycle of mass adoption within the ecosystem. And this is the projects we select. The team is a very diverse team. Obviously, Astrid, my co-GP, and Christian have been also co-GP, have been around for a very, very long time, right? Going even back to the foundations of Ethereum. So there's a lot of know-how. We dig deep in our diligence. All of the projects that we're investing in are exactly the projects we like to see in the ecosystem that can drive mass adoption. So whether it's facilitating access to data, whether it's indexing blockchains or ecosystems, whether it's providing APIs for third-party providers to hop on and get the data that they need in order to build in certain ecosystems, whether it's unlocking liquidity from the Bitcoin ecosystem to be used in DeFi, whether it's bridging solutions between blockchains and so on and so forth. All of that grows the ecosystem as such, and this is the projects that we like to see and we like to see succeed, because we think that these investments are the most profitable venture strategy for the next cycle.
Well, Alex, that's I mean, that's a statement we could put on the headline, or perfect even as closing statements. I mean, thanks all for your interest, and if you want to stay in touch with us all, use either our Telegram group as a pinpoint where you can stay in touch with us on a daily basis, or meet us online at the Cryptotax Update every last Wednesday here in our Cryptotax Updates. But we're also having our Validvent Tech Talks where we can meet physically, either last Monday in London in course of a Mika Roundtable, or next Tuesday in Vienna, the Austrian Startup House. It's always the first Tuesday of the month where we host a physical Validvent Tech Talk. Next Tuesday, as it happens, is a Validvent Tech Talk where we jump into, well, let's say, the future of digital art. We have Andreas Pettersson, who is also well known in the space as founder of Capacity. He's been around back the 2070s era, where he performed a lot of initial coin offerings on the technical side, and then also was the lead in the Austrian crypto stamp back in 2018, and also some security token offerings now coming with TuneTag. Music tokenization on startup, or actually it's not music which is tokenized, it's rather the IP rights to it. And what if as a Web3 identity, aka Elisabeth Mühlbacher. She's a gallerist and she'll venture frame it and digital created art. I'm not saying fund, but I say rather ecosystem. So we're gonna have these two pitches on TuneTag from Andreas and from Frame It on Elizabeth next Tuesday, which is the first Tuesday of April. Anything else I forgot? Anything else I should add, or what I forgot? If there's nothing else around.
Yeah, no, also from my side, an invitation to join our socials, which are, as Georg just mentioned, our Telegram channel, where you can also ask questions and are able to receive back from our community, or from Georg and other team members, as well as obviously Instagram, X, and LinkedIn. And this is also the place where we share all the announcements and reminders for our monthly events. Yeah, as Georg just mentioned, and I wanna also take the chance to thank you, Alex, for joining us today. It's been very interesting. Thank you for your insights, and I look very much forward and hope to see you again on some future episode of Cryptotax Update, and then we'll check back then where we are at the meter regarding adoption and check the status back then in the future. I very much look forward to that.
Thank you so much, Georg and Johannes, for having me. It was a pleasure.
Thanks so much. Have a good evening, all. All the best.
Cheers.
Cheers.
See you in the Telegram.